And today we see an incredibly powerful reaction in the market. Despite the high post-CPI volatility, technical analysis was respected with impressive precision. As always, all the main support levels in our stocks were respected. And what's more, we see some of them breaking through their resistance points. We'll talk about that and much more in this video. Welcome to the Finance Hydra channel. My name is Nathan. I'm a trader sharing my thoughts and ideas here on this YouTube channel. Welcome or welcome back to the Finance Hydra channel. Now, some people, a minority obviously, were very worried about today's CPI, saying that technical analysis wouldn't work, but as always we proved them wrong. If you don't know how to read the charts properly, then of course you will have problems, but that's not the fault of technical analysis. It's yours. And as far as I know, as far as I can see, once again our reading holds true. Let's start with the SPY. What is SPY's most important support level? $539 down here, because only by losing this key point we're gonna trigger a technical bearish reaction, possibly a bearish pivot point. However, SPY today, although SPY dropped very sharply over here, we couldn't break the $539. In fact, when we look at the 1 hour chart, it feels like it just dropped to close this open gap over here and then started to react immediately. Therefore, it is still respecting its most important support levels down here. Now, what is SPY's most important resistance level? $551, which we are trying to break right now today. Why is this key point so important? Because it is Friday's high. Last Friday, we saw this massive bearish candlestick pattern over here, suggesting a possible exhaustion bar, because the bearish movement was already materialized, and then we see such bearish bar near its Fibonacci's retracements over here, making a false breakout from the 38.2% over here. That's a classic exhaustion bar, and by breaking and closing above Friday's high, SPY is going to reinforce this bullish thesis. What's more, it is breaking and closing above the 21-day EMA, the exponential moving average on the daily chart as well. Therefore, it is a double resistance level that SPY is trying to break right now today, suggesting more upside for our stocks. Only if SPY loses the $539, it is gonna turn really bearish. Nathan, what if SPY makes a very ugly bearish reaction this week and loses our $539 down here? Then okay, we're gonna trigger a possible bearish pivot point, and in this case we're gonna seek lower levels, potentially the 61.8% Fibonacci's retracement on the daily chart over here, around $530. Alright, very simple situation. As long as we respect our most important support levels, the situation will remain under control. The QQQ has a similar scenario. We dropped today, but we are still above our most important support levels. Right now, we are breaking the $461 resistance level, making this another exhaustion bar right above its critical Fibonacci's retracements down here, namely the 61.8% one. Therefore, this is a very good timing for a bullish reaction, and the QQQ is trying to react very nicely, breaking its most important resistance levels, suggesting that our tech stocks are supposed to seek higher levels. Let's start with Nvidia, because Nvidia is not only breaking the 21-day EMA over here, but if we take a look at the weekly chart, we are making a very nice reaction above the 21-week EMA, and we are trying to materialize a bullish candlestick pattern on the weekly chart as well, which could be an above the stomach, or maybe a bullish harami. I don't know how the weekly chart is going to close. And of course, we don't need to know in order to trade well. Real trading is reactive, it is not predictive. We do not need to predict the future in order to be profitable traders. Now, by breaking the 21-day EMA, Nvidia is going to give us a very nice bullish signal. It is trying to seek our next resistance level, which is $131. Nathan, what could possibly frustrate this bullish thesis of yours? Only if Nvidia loses the previous support level, $100, all right? Because, why? Because it is gonna trigger a crystal clear bearish pivot point on the daily chart. If we see a top signal below the 21-day EMA, all right, that's gonna be an alarming signal. And then if Nvidia materializes this bearish pivot point, then okay, we're gonna reverse. It is not gonna be a real good, meaningful bullish signal on the weekly chart, probably. And in this scenario, we're gonna seek even lower levels, probably the $90 support level down here on the weekly chart. However, as long as Nvidia keeps trading above our main support levels, the situation will remain under control. The bullish thesis will remain valid, period. All right. Now, Tesla is also respecting its most important support levels. Today, apparently, we just dropped to retest the 21-day EMA on the daily chart, and we are quickly reacting from here. That's a very good bullish signal. What's more, there is a purple trend line connecting the previous support levels on Tesla, and seeing such reaction above these two support levels, this dual support area over here, it is a very interesting and meaningful signal for Tesla, suggesting more upside left. What's the most dangerous challenge for Tesla right now? The $233 resistance level, which was a previous support level over here on July this year. It was a resistance level here, 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 and last Friday again. So we gotta break $233 in order to materialize a meaningful bullish chart structure. What's more, Nathan, what if we lose this dual support level over here, the purple trend line and the 21-day EMA? In this scenario, we are gonna truly reject the bullish thesis, and in the worst case scenario, we're gonna seek the next support level, $182 down here. There are no other meaningful support levels on Tesla besides 182. Therefore, we gotta be extremely careful in this scenario. However, by making this upwards breakout, I do see Tesla retesting much higher levels. There is an open gap at 245, but if you ask me, Tesla would retest our next resistance level on the weekly chart, 265. That's gonna be a very meaningful and a realistic target to work with, especially because it seems to me we have an ascending triangle chart pattern over here in Tesla, right? And by making this upwards breakout, we are gonna trigger this pattern, suggesting a crystal clear upside for Tesla. And for you who want to learn how to trade stocks in practice without feeling any anguish, without any stress, and without any fear, then join our Telegram channel, the 5% Project. It is free to try, and as a bonus you will get my ebook written by me, where I detail the basics of technical analysis based on our trading methodology that we see here every single day in our videos. Therefore, check out our website where you will find everything you need to navigate this market without fear. Come on and learn with us. The link is in the video's description. All right, now AMD is also making a very nice bullish reaction. We are breaking and closing above the 21-day EMA over here. What's more, we are trying to break the 38.2% Fibonacci's retracement after making a bullish reaction above the 61.8% Fibonacci's retracement. Therefore, AMD is poised to seek higher levels. What's AMD next resistance level? 162. Nathan, what it takes for AMD to frustrate this bullish thesis to the 162 if we lose the previous support level around $132 down here. Only by making this bearish pivot point, then AMD is going to resume the medium-term bearish momentum over here, and in this scenario, we are gonna seek the next support level at 121. But as long as we stay above our support levels, great, AMD will remain very, very bullish. Now, Palantir is insanely bullish. We are clearly above our most important support levels. The next support level is around $33.13. If we lose this key point, then alright, Palantir is going to trigger a sharper correction, a pullback to the 21 EMA area, or maybe to the $31 over here. But since the trend is still very bullish, any pullback would be just another buying opportunity. Palantir was on my personal radar, but this movement over here was way too intense, alright? So I'm just waiting for another opportunity. And remember, if you do want to trade with me, just check out our website for more information, link in the video's description. Super Microcomputer is reacting. Let me be honest with you guys, I would prefer to see Super Microcomputer dropping a little bit more just to retest the $357 as a support level, which was a previous resistance level over here on August last year. But right now we are reacting above this key point. Okay, it is good. But as far as I know, we are still in bearish territory. Therefore, we gotta be extremely careful over here. Only by breaking and closing above the 21-day EMA, Super Microcomputer will enter bullish territory again. We see an open gap over here above the price, which honestly, I think it is gonna be closed in the next few days or maybe in the next few weeks, but we are not necessarily in bullish territory yet. Maybe we will soon, maybe we won't. It all depends on how it is gonna close the weekly candle, if you ask me. Because if we do materialize a bullish candlestick pattern on the weekly chart, odds are that we're gonna seek higher levels. We have a major resistance level around the 21-day EMA, but by breaking this key point, the $636 is gonna be our next technical target. Therefore, Super Microcomputer is a very interesting stock to keep an eye on right now. And the ARM holdings, you guys like ARM holdings? Right now, we are on the verge of triggering this bullish pivot point. Higher high, higher low. Alright, this is a very good and interesting bullish chart structure. It is the best bullish chart structure ever because it is indicating to us that ARM is going to finally reverse this bearish sentiment over here. We made recently in the past few months over here, we materialized this bearish pivot point. Lower high, lower low. By materializing a higher high, higher low, we are finally breaking this bearish sentiment and starting to turn bullish again. We are above the 21-day EMA, very good. And by breaking and closing above the 138, ARM holdings will technically turn very bullish again. In this scenario, our next technical target is around $173. What could potentially frustrate this bullish thesis of yours, Nathan, if we lose our previous support level, 114? Alright, as long as we stay above this key point, the bullish bias will remain intact. And if you're still watching this video and you're not a subscriber, come on, just subscribe to this channel for more daily analysis like this. You probably did like the content so far, so just join the Finance Hydra channel community and click the like button to support me as well. It is very important. Thank you for your audience. Stay safe. See you guys tomorrow.